Hello and welcome to Property Question Time. I'm Stephen Galpin and this is the programme where you can have your property related questions answered by our team of esteemed experts. With me today are John Howard, property developer, author, public speaker and generally good chap. Welcome, John.
Thank you, Stephen. Good to be back.
Good. Trip down to London okay?
Lovely. Easy as anything.
Jolly good. No traffic, I hope.
Only an hour on the train from Ipswich.
Oh, right. Okay. Good. Also joining us by Zoom from France is Trevor Leggett. Trevor, welcome to you.
Hi, Stephen.
Trevor's the founder of Leggett Immobilier, French estate agents and property advisors. John, we're going to start with your question first, which is, I reserved an apartment in a new development which is around 1 year away from completion. However, the developer has gone into liquidation and so too has his solicitors, who I think were controlled by the developer in some financial way. Luckily, I've not exchanged contracts yet, so my loss is just the £5,000 reserve deposit. Will I get this back or must I just write it off as a bad experience?
Well, first of all, it's not just 5,000. You know, £5,000 is a lot of money and you should not have to write that off. If the job was done correctly, my worry is that if his solicitor's done the job properly, hopefully that 5,000 is protected in a separate account, and that you should be able to get that back. If it was passed across to the other side solicitors, which it might well have been, that may be and that could have been passed on to the developer, then good luck. Under some of the 10-year warranties, they do allow for this, but more recent ones are stopping it because this is happening quite often, and obviously ultimately the 10-year warranty is an insurance policy, and a lot of them are stopping this policy from going forward. They're still doing the 10-year warranties, but they're not including deposits in that. So please, anybody out there looking to purchase like this going forward, please be careful. Make sure your deposit is secure in some way, be it an insurance policy, backed policy, or it's held independently.
All right, John, do you want to just, you referred to it being passed over to the other side solicitors and perhaps released to the developer. Do you want to just explain the difference between stakeholder and agent in terms of holding these deposits?
Okay. If it's held as a stakeholder, that means it's not released it's not released from the solicitor to the builder, contractor or whatever who you're buying off. If it's held as agent, that means it's allowed to go across to the developer. Now, on some of the new build schemes where people are buying them off plan, some of them would be paying up to 30% deposit on exchange of contracts, and all that money was going across as agent. So it was all going to the developer to support the developer building out the scheme. And without that, they probably couldn't build the scheme out. Now, more recently, it's changed, thank goodness. So the most that can go across at the moment, mainly with most people, with most developers and most solicitors, only allow 10% to go across, and that is normally held as stakeholder, so the builder, contractor cannot get his hands on it until completion.
Can he use that as any kind of security for his borrowing?
Certainly, if they've exchanged contracts, some banks will look at that and say, well, that's as good as sold. I would be more dubious about that, but some would consider it as sold and will release more funds to the developer on the fact that the property is exchanged.
Now, with this particular questioner, he's saying he paid his £5,000 deposit. I'm guessing that he'll have probably paid that via an estate agent, will he not?
Well, sometimes, depending how big the scheme is, it might have been direct with the developer, of course, because they might have a sales office and it might have gone direct, and that, if it's gone direct, that's a problem.
Okay. If it's gone to the agent, are they obliged to keep it in any kind of special kind of account?
Well, of course, with rental deposits, which actually that's what's happening. Basically rental deposit held in a separate account independently now, and you can and it's safeguarded. And I think the same is going to happen with these types of deposits going forward. But of course, if this was a year or two ago, then maybe not.
Okay. Trevor, what's the system in France for this sort of thing?
Well, I mean, normally the bank guarantee what's called a guarantee de chèvement, which is an achievement guarantee. And although the insurance is a legal requirement and there's no way they cannot offer it, because you cannot sell off plan or do anything without falling into a very strict framework of, basically you can't commercialise it without it. It must be said nonetheless that if you do need to make a claim against the developer, the bank has to step in if the developer goes bankrupt. It's a really long-winded affair. I mean, we've had it happen a couple of times and we've managed to get the money back, luckily for the clients. It doesn't happen very often because really it's quite complicated to be a developer. Not everyone can do it. These guarantees are only normally given to really quite solid companies in the first place, and you can't operate unless you have them. No, but it does happen nonetheless. It does happen.
But Trevor, that's a really good point, and I think the way France does it is very, very good. And I think England are getting there. I think we're nearly there because of the fact there's been problems. Giving 30% to a developer before he's even started work on the site is crazy.
If they didn't have such a strict procedure in place in Latin countries, people would probably abuse it. So the government, again, being that they're quite strong state policy, means that the government intervention is there to protect the consumer. And you need to do it because, frankly, I mean, if you were operating with companies in the south of France, if they could get away with it, they probably would. So they need to be kept on a tight leash.
No, well, it sounds a very good system, Trevor, and I think here is becoming the same. Yeah, fortunately.
John, I mean, just on this subject, you touched on their buying off plan. Do you think COVID's going to have any effect on that?
Well, interestingly, I'm looking at a block at the moment we're looking to do in Birmingham of 130 odd flats. And we're looking into this right at the moment. And it's interesting, there's a number of very good companies who are offering this type of sale to developers. And some of them are very professional. For a lot of developers, it's a very safe way of doing a development because you've sold them all in advance. Okay, some might fall through, but these people, as long as the organisation are buying these units initially and then selling them on, as long as they are financially stable and big enough to cope with buying them if they have to, then the developer's fairly safe, and the bank love it, of course. But the key is to find an organisation that, and they are out there, who will buy the block. At a discount, of course, but have the wherewithal to complete if their sub-sailors don't.
Well, that's the difficulty. There's two issues there. I was involved in a development down the road here that did exactly that. It sold the entire blocks off to a, what shall we call it, a property club, who were then going to sub-sell to their people. Well, of course, that was all very well until the government came along and said no mortgages should be given to sub-sales. You've got to be a first-party contractor. So that kind of threw that into a problem. And then, of course, you find that the club that's buying actually hasn't got much in terms of assets itself.
No, but they have changed that now. It's become more sophisticated now, and it's much more of a professional setup. And these companies, you just make sure if you are doing a small development or bigger development and you want to do that, you have to make sure that the people behind all this and who are going to step in and buy them if their buyers don't, has the money to do so. And that is the key. Don't deal with them if they haven't. If all they're going to say is, oh, well, we'll take a flyer on it. No, you want to make sure that people have got the money behind them to buy these if their buyers, do not perform.
Yeah, John, it is quite interesting the way we do it here with the finance. The banks is the bank that finances the developer cannot finance the mortgages for the buyers, and any one bank is not allowed to finance more than 30% of the total sales in the development. So they have to split it between 4 banks, the risk.
Yeah, well, I think here, Trevor, to be fair, in my experience at the moment, most building societies or financial institutions won't lend more than 15% on any one block. But you would, say Barclays funded the scheme and then Barclays did 15% of the mortgages. That would be allowed in the UK.
I think with these bulk development sales, I think you have to be awfully careful of not starting to play pass the parcel.
You have to make sure you're dealing with a bona fide company who have got the money. That is the key.
Okay, lovely. Thank you, John. Trevor, your first question. I currently live in the UK but have previously stayed in France for up to 3 weeks at a time. I'm thinking about making a permanent move to the country. However, I do have a lot of family and friends in the UK that I'll want to see regularly, at least every 2 months. What level of residency and in which country you would think would suit me best in terms of residency?
So what are they saying? They spend 3 weeks every month in the UK, or 3 weeks every how often?
Well, it looks like they want to move to France, but they want to be able to go home every couple of months.
To see their friends. They've got more friends than me and you, Trevor, obviously.
Currently, the way it's set up is at the moment, the French haven't decided if they're going to allow Brits to stay over 90 days without a visa. At the moment, they can come for 90 days without a visa. They can apply for a visa to stay 6 months, up to 180 days, as it was before. Beyond 180 days in the country, you are supposedly automatically resident. You're assumed to be resident. So then you really legally have to take up residence. If you split that 180 days amongst other countries, so for example, you spend 90 days in France, 90 days in Spain, and then in UK 90 days and somewhere else 90 days, you could actually be non-resident anywhere.
And not pay any tax anywhere.
You could, but it's quite complicated to prove, and it's down to you to prove it, not for the authorities to prove it. And I think this is where people get this misconception, is that it's not their responsibility to prove it, it's yours. Technically, I know this because I'm only allowed to come to the UK and work for 32 days a year.
Is that because we don't want you any more than that, Trevor, or is that because you're just not allowed to?
No, I'm not. I'm not allowed to spend more than 90 days in the country as a French taxpayer. And although I probably pay more tax in France than I would pay in the UK, it's irrelevant. And I had to recently prove to, HM Customs that I wasn't spending that amount, which I don't, obviously. It's quite straightforward. Getting your residency in France, your carte de séjour, can be done online. It's a really easy process because obviously they're not trying to discourage Brits from coming and residing in France and, in their latter days and spending all their money here. They obviously, quite the contrary, would love everyone to come and spend their retirement in France. So they made it really easy. It's an English-speaking platform from the prefecture. You log on, it's dead easy. You put things in, you scan your relevant documents into the system, and off it goes. And then 3 weeks later, they call you, ring you, you go into the prefecture, they take your fingerprints, take some mug shots, put you on record, give you a carte séjour, and away you go. You're resident. It's simple as that.
Here, Trevor, we'd like you to have £1 million to deposit first.
No.
Or you come over on a boat. It's one or the other.
You have to prove that you can support yourself. But in France, unlike our Home Secretary, who decided to suggest something absolutely ludicrous to actually decide that you could support yourself, they are saying 12,000 a year. So if you've got 1,000, that's basically what they consider, without any other 12,000 or free, obviously not including any loans or anything, but or you have a job in France or a business.
That's me out then.
All right, gents, thank you very much for that. That's all we've got time for in this half of the programme. Join me again after the break. Hello and welcome back to Property Question Time Part 2. I'm Stephen Galpin and with me are John Howard. John, welcome back. Thanks. And Trevor Leggett. Welcome back, Trevor. John, your second question.
Yes.
Given that so much money has to be reclaimed as the cost of COVID rises, does the panel think the days of being able to sell one's home for a profit, free from all tax, are over and in the future may be taxed?
Very simple question. And a very simple answer.
You're going to say no, aren't you?
Under a Conservative government,
right,
that will never, ever, ever happen. Under a Labour government, who knows? Because they could well say, if you have a property that's worth £1 million, or they might put a threshold on it, I think. And I think, I think that there's millions of people in this country that own a property worth more than £500,000. Millions and millions of people now. Because, everything's gone up over the years. And of course, new homes cost more to build, inflation and everything else. So they've got to be very careful on this. There's a lot of champagne socialists, of course, in this country who own very expensive houses, I don't think they'll be too happy either. So maybe it will never happen, but certainly under the Conservatives, never in a million years.
What's the situation over tax when you sell your own home in France, Trevor?
Yeah, I mean, it's sacred ground in France as well. I mean, a man's home is his castle here, like it is in the UK, and it is a sacred ground that you sell your own home without paying tax equally here. Frankly, it would cause uproar. There was no way they would dare do it. You know, there are certain things in France that you can't touch, and that's one of them.
And of course, one thing I would say is they don't really need to, because they've got inheritance tax.
Exactly.
They are sort of claiming it back with 40% inheritance tax, aren't they? If you've got a house worth more than, if you've got a house worth say £500,000, which many people have, then actually the threshold's 350,000 or something. So you automatically get into that at some point. I know you can double up if it's a husband and wife, but at some point the tax is paid. So what is the inheritance tax in Trevor, in France?
Well, to be honest with you, nowadays most people put everything into corporate envelopes if they've got larger portfolios and property. They tend not to leave it in their own name because it's kind of risky. They will, basically it's 100 grand officially per child, and of course, good. A lot of French families are quite big. So if you've got 3, 4, 5 children, it's not really an issue. The birth rate's still quite high in France. There's still big Catholic families with 5 or 6 children is really not uncommon at all.
No, interesting.
So I mean, yeah, it's 100 grand, but really in reality, it's 100. The wealth tax on property kicks in at 1.3 million on your own home, which you'll pay a tiny percentage of the value of your assets annually. Again, most people who have quite a lot of property will have their commercial assets in corporate envelopes,
But actually, if you're coming, if you live in the UK and looking to go to France, that is something you need to consider, and you do need to get some really good advice on that, because, you might decide actually you're better off to keep the property in the UK and rent in France. Who knows? But I mean, you do need to really consider that, especially as older people tend to move to France. It's really important that, and Trevor can.
It's really important to get the right
people,
advice.
no doubt.
It really is important.
Yeah, very important.
Well, transition of capital is always an emotive thing, isn't it?
It is with families.
Yeah,
that's for sure.
And I mean, that just brings me to slightly another topic. Do you think we could ever see, because of this COVID and the need to get investment working again, do you think we could ever see exchange controls again?
I don't think we'll see that, but I tell you what really disappoints me is this corporation tax of 25%, £250,000. Now, I've had people say to me, Paul Mahoney, good friend of ours on the show, Nicholas Warwick, another one, oh, I don't mind paying a bit more tax. Well, I do. It's always, is it trendy to pay more tax or something? I mean, it's ridiculous.
They must have had a word with Macron.
Well, must have done, Trevor. Bear in mind that people who have got a company earning more than £250,000 are probably paying a lot of personal tax as well, probably 6 figures. And the whole point of conservatism is to get corporation tax, is lower taxes. And they were aiming to get the corporations tax down to 16%. Southern Ireland is 13%. And if they want to be competitive across the world, surely putting it up to 25% is madness.
John, what's the population of Southern Ireland?
About 5 million people.
And the UK?
65 million people that we know about. There might be a few. There might be a few more.
Is your answer why it's not the same tax rate?
Well, you say that, but of course, Southern Ireland are meant to be sued by the European Union for dropping it to 13% because they're all meant to be the same. We now don't have to do that. So we can have it at 12% and encourage, thousands of new companies across the world to come and work and live in the UK.
John, you introduced, well, not you, but the Conservative government introduced things like free ports all over the country, and then whop up corporation tax. I mean, it's almost...
The free ports, and Ipswich and Harwich have actually, in Felixstowe, are in the free port area, one of them, which is fantastic news. We think we're going to create 30,500 new jobs in our area over it. It's a fantastic idea. But again, like you said, they're then saying, when you've got multimillionaires who can be based anywhere in the world, that's the problem, because these entrepreneurs create wealth, they create employment, And that's the problem. They can be based anywhere. They're multimillionaires. They can be based from their yacht if they want. They don't have to be in the UK. And if you put the corporation tax up too much, they won't be based in the UK.
Okay. What do you think, Trevor?
Well, we're at 28% going down to 25, so we're on the way down with corporation tax. We came down from 32. I think if we all end up around 25, we'll all be on equal ground. I think one of the reasons...
We don't want to be equal. I'm sorry to jump in. The last thing we want to be is equal with France. We want to be at 12% and competitive. That's what we want to be.
You might, but I mean,
across
I think
the world.
if you want to have a decent relationship with your neighbours,
We don't.
you're going to have similar taxation.
Why?
If you
Why do
really
we
don't
need a
care
good
about your
relationship with France
neighbours, then-
particularly? Why do we need a good relationship? We've got the whole world to work with, not just Europe.
Well, I think that's not working out very well at the moment.
Early days, I think you'll find we'll be fine. Trevor.
Okay, gents. Well, let's move on. Trevor, your question is this, and again, I'm sure John will want to come in on this one about the UK market. But what is the current state of the French property market? Is it good or bad? And is it a good or bad time for getting value for money?
Well, I mean, I've never seen the market like this. I've been here since 1989, and frankly, I've never seen anything like it. Luckily, there's enough stock still so that prices are just gently nudging upwards. They're not moving much, because my biggest pain would be for property to go through the roof. And although a few people would make some cash along the way, it would stifle the market. It would actually reduce the number of owner occupiers. And what I wouldn't like to see happen is an increase in values in property as it had in the UK, which excludes young people from the property market. Because youngsters, unfortunately, are the property market, whether you like it or not. The first-time buyer market has to be buoyant for the rest of the market to survive. It doesn't go top-down, the property market. It goes bottom-up. And if the bottom of the market is out of reach, you're buggered.
Agree. What do you think, John?
Surprisingly, I agree with Trevor. Totally and utterly. And interestingly, you know, I've got some estate agencies in Norfolk, Fine and Country, and when we came back from the lockdown, the 4-month lockdown last year, we were holding our breath. I'll be quite honest with you. We made substantial amount of money available to the company in case we needed it, because it doesn't take long, and Trevor knows this with the thousands of properties he sells every year in France. It doesn't take long if things start going wrong and you don't sell many properties to be in trouble with an estate agency. So we made sure we had plenty of funds available for the business. As it happened, not only did we not need those funds in the end, we've had the best year we've had in 10 years. And that's just, and you know, we run a very tight ship and we're very professional. Sadly, for me, other companies who aren't very professional, aren't very good, have also done quite well. So everyone's done well. We've done exceptionally well. They hopefully have only done okay.
You're in part of the UK, John, that's affordable, though.
Well, what I would say is it's interesting, because the people we sell to normally are the higher end, the 500,000 plus properties, and they're the people who have been coming out of London and other places, selling for more money, coming to Norfolk, say, and Suffolk, and paying a lot less than they're selling for, and banking a load of money. And a lot of them, I think, are saying, look, this is a move we're going to make in 5 years' time, but we've sat here under lockdown, we've thought about it, and actually, hell, why don't we move now? I don't need to be in London or Manchester or wherever they are every day anymore. I can work from Zoom a little bit and maybe go in a couple of times a week to where they did work. And I think everything is changing. Within 12 months, we've moved forward 10 years in many, many ways. And I think some of those ways are very good. You know, it's going to help, you know, the environment and all sorts of things, not travelling back and forth to work every day. I mean, look at Trevor today, you know, he's sat at home, he's not working. Are you, Trevor? He's sat at home, not working. And
I'm actually on a 4G connection. They're putting a fibre optic in down my road in the next 3 weeks. I'm going to get fibre optic here.
I'm surprised you got a road. I thought you'd have a long private drive. But what I'm saying is you're able to work from home. You're in France. You're working with us here today. It's fantastic. And that is the future.
Well, look at John. I think Trevor actually hit the nail on the head when he said that, you know, the market should go bottom up.
Yes.
Unless that market works at the bottom end, nothing's going to work. And I think our government have missed that. We've got penal stamp duties at the top end of the market. So although they've tried to encourage the bottom end, they've frozen the top half of the market. And that's counterproductive. The market needs to work all the way through for everybody.
I sort of half agree with you, Stephen. So that's a good start, isn't it?
Possibly.
What I would say is that this government realise that the first-time buyer market has to be good, has to be strong, and that's why they've done 95% mortgages, guaranteed the top slice. That's why they're doing Help to Buy. And of course, what was happening with the bottom end is that new homes, first-time buyers, homes were more expensive than second-hand ones because of the Help to Buy scheme. So by allowing a 95% mortgages guaranteed on the second-hand homes, that's balancing it up. That will balance the market up a bit. As for the top end, I agree with you. The stamp duty is crazy. You could argue there should be no stamp duty. It penalises people moving.
There was a reason for that, John. It was that a lot of the people at the very top of the market were buying in corporate envelopes and selling the shares. So the government were only getting one hit at it. They were getting one bite at the cherry.
But they have, Trevor, they've changed that now. And actually, if you're a foreign investor into the UK, you're paying an extra 2% stamp duty. So they've turned that right round. What is the stamp duty or equivalent in France, Trevor?
We haven't moved. Literally, it's slightly decreasing as you increase, but on average, the stamp duty is between 5.5% and 4%.
On that note of hearing prices coming down, I think we'll wrap the show up.
Definitely, we don't want that.
So, Trevor, thank you very much for joining us from France. Very appreciative of your time. John Howard, same to you. Thank you very much for coming.
Always a pleasure to work with Trevor, by the way.
Jolly good. I'm pleased to hear it. Okay, well, that's all we've got time for on this show. So, from me, Stephen Galpin, it's goodbye and see you next time on Property Question Time.